Now, building a dividend income focused portfolio that at some point in the future can pay for all your expenses, all of your bills, and then some is a goal that a lot of us dividend focused investors definitely have. And this is because at that point, if you build up enough assets of different stocks and ETFs that have the ability to generate enough consistent income to pay for all your bills, well, at that point, you're essentially financially free. But in this video, I want to go through 5 different ultra high yielding ETFs that have the potential to not only pay your bills, but have the potential to do so a lot sooner than other traditional dividend focused ETFs or stocks. Now, this is because all these different ETFs offer a relatively very high starting yield, but on top of that, all have a positive total return. So investors, at least historically, have made quite a bit of money off all of these. So again, if you are an investor that wants to build out a portfolio that can pay for things like bills or other expenses, make sure to stick around, drop a link down below, and let's get right into the first ETF. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the first ETF that I personally own as of right now and am hoping to utilize to pay for things like expenses, vacations, etc. in the future is SPYT, the Defiance S&P 500 Income Target ETF. Now, this ETF is sort of perfect, more or less, at least as of so far, if you're looking for something to use at least a partial distribution, if not the whole thing, to pay for things like an expense. And this is because this ETF has a target to return investors 20% per year. Of course, this can happen. It can also not happen, but that's the goal here. This ETF also, since inception, is basically trading sideways, which is not bad whatsoever, considering as of right now, the distribution rate is around 20%. Now, also, this ETF could be a good option because it more or less pays the same exact amount on a monthly basis, which happens to be anywhere from around 32 to 33 cents per share, which, keep in mind, a share of SPYT is only around 20 bucks. Now, this means that in theory, if you came up with a bill, let's say it's your cell phone bill or your insurance bill, and you wanted to get to a point to where you wanted to use SPYT to cover the entire bill and then some, you could basically do some basic math and see exactly how many shares you'd potentially need. Now, like I said, SPYT basically has traded sideways since it came out, which again might not necessarily seem great in some instances, but because this ETF is an income generating ETF, which again could potentially help you pay bills, I would look at this one as a win. The next ETF that I personally hold on to and that also could potentially be a good ETF to pay for things like bills very fast because of the massive distribution rate is ticker symbol ZIVB, or the -1x short VIX midterm futures strategy ETF, which has a distribution rate of around 30%. Now, this ETF basically shorts the volatility index, and as long as there's no adverse moves in the market, will potentially keep doing just as well as it has already. Now, the fund NAV since inception is around 61%, and this ETF that offers almost a 30% yield on the max time frame is up 33+%. So this means that investors that bought into ZIVB a while ago are not only up as far as ETF price because, of course, the strategy and the way the market is traded within this time frame, but also have been paid 48.5 cents basically every single month since inception. Now, with anything that has this strategy and or that offers a 30% yield, it's going to come along with some risk if you ask me. That's why for me personally, a strategy like this would be a smaller position. But again, if this is what you believe in for your own portfolio, go crazy. But I have slowly been building up my position in ZIVB, and I will likely be using this position in the future to help me pay for my expenses later on in my life. Another good ETF that could potentially help you pay your bills a lot faster, a lot sooner, with a lot less invested is QDTE, or the Innovation 100 One Day Till Expiration Cover Call Strategy ETF. Now, this ETF says it utilizes a synthetic covered call strategy that seeks to provide current income on a weekly basis, while also providing exposure to the price return of the Innovation 100 index. Now, this ETF was the first to utilize 0 days till expiry, which is basically a very short-term option strategy, which, if done right, can generate a ton of premium, which this ETF has done so far. Now, the distributions are paid out weekly for QDTE, which could definitely come in handy if you're looking to build out a position to help you pay for things like bills and expenses, because waiting for a quarterly payout and or even a monthly payout for some people might not be enough. But this ETF is paid anywhere from 20 cents to 31 cents to 27 cents, 21 cents, and ongoingly been paying out a lot of distribution to investors on a weekly basis, which at least as of this point, investors have loved. Now, this one might be a little bit tough to know exactly how much you're going to get paid on a weekly basis because it's going to be more dynamic. It's not going to have a target necessarily. Some weeks you might get 44 cents, some weeks you might get 19 cents. So definitely take that into consideration if you're looking to build out a position that's going to pay for things like bills, because you want to have an idea of what you're going to get paid, at least somewhat, right? But this ETF so far at least has shocked me and a lot of other investors and has offered a nice positive total return of anywhere from 12 to 18% if we annualize things out and if we were to reinvest the distributions along the way. And although this ETF is actually in the red on the max time frame, it's down around 6%, I still personally would call that a win because it yields so much north of 30%. Another position that I think could potentially be a good option if an investor wants to build out income-focused positions to pay for things like bills a lot sooner is another one of my larger holdings in this category, SVOL, or the Simplified Volatility Premium ETF. Now, SVOL uses part of its fund to short the volatility index similar to ZIVB, but also SVOL also holds on to different things like bond funds and everything that you can see right here. Now, SVOL is a little bit more diversified than some investors might think because if you look through the holdings, there's things like the iShares Core S&P 500 ETF, there's things like a high yield PLCR, and even things like an aggregate bond ETF. So with SVOL, you of course are getting exposure to the volatility index, or I guess the lack thereof, because you're shorting it. But with SVOL, you're getting even more than that. Now, this ETF distributions have been anywhere from 30 cents to 28 cents consistently now for a while, so you're looking at around 14-15% yield if I'm not mistaken. Now, SVOL on the 1 year is down 2.6%, down 6% year to date, so it has been having a little bit of troubles. And on the max time frame, it has decayed a little bit, basically trading pretty close to an all-time low as of right now. But I still think SVOL has some good opportunity to perform very well because I personally am very bullish on the market in the next few years, which means I think volatility is going to be quite low. Now, the last ETF that I think could be a good option for investors that are looking to receive a massive amount of income a lot sooner and looking for ETFs that could potentially help cover things like bills is XDTE, or the S&P 500 one-day till expiration cover call strategy ETF, which is basically the same thing as QDTE, only this one's utilizing, you guessed it, the S&P 500. Now, this ETF has done very well since inception, also paying investors massive distributions on a weekly basis, but also the ETF has maintained their NAV, which is very impressive. Now, as far as weekly payouts, we're looking at 23 cents, 21 cents, as low as 18 cents as of recently. But even if we were to average things out over the last 6 or so months, it still has been offering investors around a 20% yield, which is not bad whatsoever. Now, XDTE on the max time frame is actually up 0.5%, but again, as far as these sort of investments go, a lot of income-focused investors are not necessarily worried about getting rich as far as capital appreciation, but as long as the ETF can maintain its NAV and pay investors massive distributions consistently, a lot of the income-focused investors, especially those investors out there that are looking to utilize things like this to help pay for things like bills, are going to be quite happy. Now, another thing to note, just like QDTE, the distributions are going to be sort of all over the place, depending on things like volatility and option premiums, but still overall an average of around 18 to 20% yield on an investment that's trading sideways is not so bad in my book. So there we have, those are 5 different higher yielding income focused ETFs that all have the potential to pay for your expenses and bills a lot sooner than a lot of other more traditional investments. Now, just because something offers a massive yield does not necessarily mean that it's a good investment. And like anything when it comes to investing, look at it in a full picture. Don't just look at yield. Don't just look at 1 or 2 metrics. Really analyze an ETF or a stock for that matter as a whole. But either way, in my opinion, utilizing some ultra high yielding ETFs that have a positive total return and a strategy that you specifically believe in could be potentially a good option if you're trying to build out a portfolio that pays you a massive amount of income consistently. So now that we went through the 5 ETFs in this video, I lastly want to hear from you guys down below. Which is your favorite higher yielding, more income focused ETF out there? Drop the ticker symbols in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.